YouTube as well, right? So I'm currently right now live on YouTube, and I'm going to send the link to access the YouTube copy right now, so you guys can go on my YouTube channel. And the guys have uploaded a lot of videos on my YouTube channel over the weekend. I discuss about spread. I discuss about lot size, leverage, so you guys can go through the videos I have and then watch those content. This content really help you, right? Especially if you are a beginner trader. So right now I'm gonna send the link for you to access the live stream on YouTube to the Telegram page. So I believe, guys, you guys are in my Telegram group, right? So just check out the link I sent in the Telegram group right now to access the stream. Okay, guys. So right, if you are watching from YouTube, thank you. You're welcome. Don't forget to subscribe, like, and share the live stream. That's where you can use the chat box to ask your questions. So first, let's go through the New Zealand pair against the Canadian dollars, currency pairs, right? So what do we have on New Zealand pair against the Canadian dollar? This is what we need to talk about. So as you all know, guys, the first thing we need to do whenever you want to decide which way the market is going to break to during the weekend, that is if you are trying to make a projection or analysis of a chart based on during the weekend, the first time frame you have to navigate to is the weekly chart. That is what you need to do, because we need to actually see what had happened last week, right? So we need to check that out. So first, I have the chart right now on the weekly chart. As you can see, based on the weekly chart, this is what we have on the weekly chart. This is what we have on the weekly chart. We have price breaking out of a descending channel. So technically, price should break out of a descending channel in an in the upside, which a pattern we got right here is actually right. This is what we are expecting. Technically, this is what price should do. So we are not surprised for price to break out of this level right now, right? So what we need to do right now is to look out for a potential point of structure whereby we can take advantage of this breakout of this channel. You can see we have this channel right from this high swing all the way down. You can see the lower structure of this channel, and price broke out of this channel at this level right here. Okay, so based on what I can see on the New Zealand Canada, next week we should be looking out for how we can join the bulls in this bull rally. Should be looking out for a way whereby we can ride a trend with the bulls. So that is what I'm going to be looking out for next week. So one of the assets I have on my list next week is the New Zealand pair against the Canadian dollar, because I actually want to play the continuation of this market. I actually want to play the continuation of this market. So this is what I have on my list. So if you are right there and you are looking out for assets you should trade, or asset that could give you opportunity of a trade entry next week, then one of the assets you should be looking out for in the market, in the forex market, is the New Zealand pair against the Canadian dollars, right? So New Zealand pair against the Canada is one of the assets on my watch list next week, right? So now we have bull trend has been defined. Based on what I can see right here, we have the breakout of a low high swing right here. However, we still have a low high swing right here. Okay, but based on the pattern we got right here, this is a signal of a potential bullish setup in this market. So okay, so let's get off this audience right here and let's try to navigate right now on the day chart. But before we go on the day chart, let's look out for key level structures in this market. So based on what I can see on the weekly chart, we have a lot of key level structures. We have a support structure right here. Can see that we got a support structure right here. We got a previous resistance structure right here. So price broke out of this key level structure that was last week, but it wasn't a strong bull trend, because price actually had a little retracement, whereby last week candlestick resulted into a bullish candlestick with an upper shadow. You can see the upper shadow of this bull right here, which means the bears exercise some interest in this market, right? Just like what we had in the previous week. You can see that as well right here. So based on this pattern right here, it does show us there's a lot of bullish sentiments right there, and the bears are not yet given over yet. So what we're gonna do right now is to navigate on the day chart. I told you guys, based on the day chart, we had a rising trend line. The rising trend line is still active, right? This rising trend line is still active based on what we have on the day chart. And then I tried to I constructed this trend line right from the swing low we got at this support structure of the 0.79694. So this level right here was a very strong key level structure. It was a major key level structure. So you don't need any indicator to tell you this is a support structure, and you don't need any indicator to tell you that price is actually giving you a bullish structure right here, because this was the last low high swing in this market. Technically, the descending trend line should have acted as a resistance for price at this structure right here. It, however, it acted as a resistance for price, but price broke this level. You can see how price broke this level at this bullback candlestick right there. And this bull candlestick actually formed on the Monday. That was on the 20th of Monday. That was the last week. So it was a strong bullish candlestick, So which showed us, even though price tried to carve a bearish, interest, that was on previous week on the 16th of November. The following week, the bulls exercised a strong influence and then closed above the descending neckline, this downtrend, right? So this is a signal the bulls are actually going up. So as you all know, the best way to reduce our risk in this market right here is never to try to jump into the market. We don't want to jump into the market. We want to look out for a low risk to high reward setup. And that is one of the easiest ways you can try to beat the market. You have to look out for a way whereby you reduce your risk and then you increase your profit ratio. That is the best way you can beat the market. That is the easiest way you can defeat the market. So what I'm going to be doing right now is I want to be looking out for a pullback of price. As you can see, last week, which was on the 21st of November 2023, price did carve a potential pin bar. But however, this pin bar didn't form at a key level structures. This key level or this pin bar didn't form at a key level structure. So which made this pin bar, this bearish pin bar, to be kind of irrelevant, right? It's not a strong or a point of interest pin bar, because there wasn't a lot of confidence factor. There wasn't strong confidence factors that aligns to this pin bar right here. So this is why you can see this pin bar wasn't actually didn't interest sellers to jump into this market, interest BS to jump in right here. So anyways, we are still looking out for a potential pullback, right? So what I'm going to be looking at next week is I am still supporting my previous technical views in this market based on what I have on the swing right from the swing higher low structure right here and the high of price right there, which is the higher high. So I want to be looking out for a pullback of price. If I can see a pullback of price to the rising trend line, then I'll be looking out to play a continuation of a higher low structure. So the best way I can get a price action right there is I will try to blend other technical setups, other technical factors in this market to see where is the next potential pullback of price, because I don't want to get in at this structure right here. I don't want to jump into the market at the high structure. I want to look out for a zone whereby I'm going to be looking out for a long entry at the lower price level so that I can reduce my risk and then increase my profit ratio. So this is how I'm going to be approaching this market right here. If I can't see this, then I will let the market to go, right? So patience is the only way you can make, the easiest and fastest ways you can make money in the market. So you have to exercise patience. And I told you guys, this is the medium whereby money is being transferred in the market, right? So application of my Fibonacci retracement tool from the higher low swing we got right here at the price of the 0.80986 all the way to the swing high we got right here at the price of the 0.8353. You can see that. So if we can see a pullback all the way down, then if you can see a pullback based on the what we have right there, if you can see a pullback to the 0.5 Fibonacci retracement level, what we got right there, it's gonna be a nice structure for us to look out for a long entry, because there's a lot of confidence factors right there. Number one, if you can see a pullback to the 0.5, we can tag this as the first confidence factors in this bull rally. And factor number two, we can see we have a dynamic or trend line right there. I am not telling you trend line is one of the factors or the signals that could lead to a bullish entry right here. I'm just trying to define probabilities. So the more confidence factors we can find at the level of price in the market, the more confidence factors you can have, these tend to increase our probability. So I told you guys, in trading, we try to define probabilities in analysis. Based on my analysis, I try to define probabilities and I tend to go with the highest probabilities. So if the probability I am able to define is higher than the probability that the trade will go against me, then I tend to go with the highest probability. So if my probability that the market is going to go in an upward direction is higher than the probability the market is going to go in a downtrend, then I will go with the probability of going to an uptrend. Likewise, if the probability says it's going to go in downtrend, then I have to stick to what the market is saying and not go for an upward trend. Hope you guys are able to get that information. So right now, if price can make a pullback all the way down to this trend line at the 0.5 Fibonacci retracement level right there, and based on the market is in a bullish market structure right there. So I'm trying to trade in the direction of the market switch, direction of the market structure, and based on the confidence factors, supporting the trends in this market right there. So a pullback down to this structure right here would be at least a nice zone for us to look out for a potential entry. And then as well, a pullback to this level right here could also give us another reason to long, because you can see we got a key level swings right here. We got it as a potential structure right here, price retested structure right here. So the question is, if price can make a pullback to this level, will this level act as a potential support in combination with the 0.618 or 0.5 with the combination of the trend line? So there's a lot of strong confidence factors right here, which could act as a point of interest for the bulls in this market on New Zealand paid against the Canadian dollar. Right? So that is the reason why I feel like a pullback low would give us a nice entry to reduce our risk, and they have a higher profit ratio. So Pira requested for GBP paired against the JPY. Pira, where are you streaming from? Pira, where are you streaming from? Where's your country? So this is what I can see on New Zealand paired against the Canadian dollar. So if you're a trader, I think a pullback to this trend line at 0.5 or the 0.618 in combination with the trend line and the horizontal key level structure graph right there could be a nice technical entry to influence more bulls to go up. Alternatively, if price should make a pullback downward right here and then price break this level and then a pullback occurs and this level rejected price as a resistance structure, then we could have a low high swing for a downtrend in this market. So that means the breakout we had right here can be tagged as a first bull move, right? So let's hope, let's patiently wait to see what the market is going to carve. The market is about to open right now, so let's see what the market is going to carve this week. Maybe we can see a pullback to this level and then rejection to the upside, right? So if we can see that, that would be nice. Alternatively, if price will break down, then that means the market is going to be pulling it down. So let's see what price is going to do on New Zealand paired against the Canadian dollar. So in summary, you should be looking out for price action at the trend line 0.5 and the 0.618 Fibonacci retracement level and the horizontal key level structure right there. So which means our point of action on New Zealand, Canada should be at these structural zones right here. You can see that? So this is the green zone I circled right here. So this is the point of interest on New Zealand paired against the Canadian dollar, right? So that is a summary on New Zealand paired against the Canadian dollar, right? So guys, let's check out other assets which was being suggested by traders. Someone said, what trading platform is this? I am using the trading view to analyze my chart. So if you actually have different accounts, I have different accounts. So if you're looking out for a reliable brokerage firm, you can check the link in my bio, click on the link on my bio, or click on the link in the description of this live stream on YouTube, and click on the open live trading account so that you can open a trading account on a reliable brokerage firm. So, okay, AUD USD by GDN early. We have AUD USD by GDN Helly. Please, your country of residence. Where are you streaming from? Pira is from Kenya. Okay, Kenya, Nairobi. Thank you. So GDN Lee, where is your country? Where are you streaming from? So guys, let's check on gold market right now. Okay, JND is also from Kenya. Okay, Kenya. Good. So let's go to gold. Let's check the gold market. What do we have on gold market? Gold market. So you guys can screenshot this chart right now if you're a trader if you're a trader trying to trade New Zealand, Canada. Please screenshot that chart, right? So that you can use this chart next week to have an idea of what you should be looking out for in the market, right? So quickly do that right now before I move the chart to the other assets we want to analyze. Right, so do that right now, guys. If you're a trader, if you're trading USD Canada, New Zealand Canada, I mean, if you're looking out for trade opportunity in the market, please do that right now before I switch the market to gold. Right, do that right now. So now let's go to the chart of gold. So we're going to start analysis on the weekly chart. No, this is how I like to start my analysis, because I'm trying to analyze the market based on the weekly projection. So this is the first thing I got to do. I got to move my chart to the weekly chart. So you guys keep asking time frame. The time frame of this chart is the watermark on this screen right here. So you guys can see the time frame is the watermark. You can see the watermark on this price chart. So I don't believe you guys should keep asking what time frame is this, what time frame is this. You can see the time frame is the watermark on the background, right? So we have Ramgad Avis from Nigeria. You are welcome. So Ramgad Avis, this is trading view, right? So let's check the US oil market. This is what I have on the US oil market. This is the weekly chart right here. You can see that. So we have a lot of zones right here on this chart. We have a price trading within the high and the low structure based on the weekly chart. So based on what I can see on the weekly chart right now, I don't like this market right here. This is kind of a noisy market. So let's check the day chart. Based on what I can see on the day chart, the market is currently noisy right there. This is a very noisy market, and I don't like this type of a noisy market. You can see that. So market is just bouncing up and down. So this type of a noisy market right here, you gotta be very careful. You gotta be very careful whatever you're gonna be doing in this market right here. So based on what I have, I told you guys I traded the US oil market and I made a lot of money on US oil market. I shared this trade setup with my traders, in my Telegram group. So if you're in my Telegram group, you should have taken this trade, right? So based on what I can see on US oil market, based on the day chart, the market is currently in a state of confusion. And I told you guys, whenever the market is in a state of confusion, it's a signal for you not to do anything on that market. Just stay off that market. So currently right now, the market is in a state of confusion because we can't really divine what the market is trying to do right now. Is the market trying to carve a new higher high or a new lower low? Or is the market trying to go in a ranging medium? What is the market trying to do right here? Is it trying to carve a new low high or lower low or continuation of what? So based on what I can see right here now, the market is currently crazy, and I'm still exercising patience to see what the market is going to do. Because if you actually want to make a trade right here now, technically it is not reasonable to look what you trade into right here. Because if you are trying to look what you trade right here, it means you are trying to long or short at the middle of the trend. If you are trying to short right here, where should you put your stop loss? Technically, the base zone you have to put your stop loss is above the resistance structure right here, which means you are shorting to the support structure right here. Now, if you analyze your risk right here, if you're going to be shorting right here, you're going to be shorting right here to this support structure right here, and the base zone to have your stop loss should be around this zone, which means your risk is higher than your profit ratio, which is not nice. And if you are trying to long right here, your stop loss should be around this zone, which means the risk to reward ratio right here is not favorable. It's not up to 2 minimum risk to reward ratio, right? So this is why this medium right here, gold is currently in a state of, oil is currently in a state of confusion, right? And I as well shared my view on this asset last week. So let's check the 4-hour chart of US oil. I want to see a pattern that looks like maybe an inverted head and shoulder. If you can see a pattern that looks like an inverted head and shoulder, I think that would be nice, right? If you can see a pattern that looks like maybe an inverted head and shoulder, that would be nice. Because this trend line, low icing right here, actually ended at this medium right here, right? Price failed to start. So let's get that off. Let me know. Type yes, I can see your screen. Type yes, I can see my icons.